Today's video is going to dive deep into two major energy stocks from the United States that long-term investors and dividend seekers absolutely love. These two stocks have built strong reputations over the years because of their reliable business models, steady cash flow, and consistent dividend payouts. I'm talking about ONEOK, which trades under the ticker OKE, and Sunoco LP, which trades under the ticker SUN. Both companies operate in the broader energy sector, but their approach to business, their long-term stability, the type of dividends they offer, and the level of risk they carry are all quite different. If you're someone thinking about long-term income, passive earnings, or reliable exposure to the American energy sector, then this script will help you understand exactly what these companies represent. Let's start with ONEOK. ONEOK is one of the largest midstream natural gas companies in the United States. When we say midstream, we're talking about the part of the energy supply chain that handles the transportation, processing, and storage of natural gas liquids. ONEOK does not drill or refine oil. Instead, it gathers natural gas liquids from different production areas, processes them, moves them through pipelines, and delivers them to various end markets. Because ONEOK's business is heavily contract-based and operates under long-term agreements, its revenue tends to be predictable and stable, even when energy prices rise and fall dramatically. This is why investors often consider ONEOK a defensive play in the energy space. The company generates cash flow from fees, not from commodity price speculation, and that helps shield it from volatility. This steady cash flow is the main reason investors like ONEOK for its dividends. ONEOK has a well-known history of paying strong dividends, and the company is focused heavily on shareholder returns. Because pipelines and energy infrastructure require large upfront investment, ONEOK does carry debt, but that debt is usually supported by reliable earnings. Income-focused investors, especially retirees or people looking for stable quarterly payouts, tend to place ONEOK high on their watch lists. Dividend strategies work best with companies that produce predictable earnings quarter after quarter, and ONEOK fits that requirement well. Now, shifting to Sunoco LP, the story here is related to energy, but the business model is quite different. When people hear the name Sunoco, most think of gas stations and fueling centers, and that's not far off. Sunoco is largely focused on fuel distribution. The company doesn't refine the fuel itself. Instead, it purchases and distributes gasoline and diesel to retail gas stations, convenience stores, and commercial customers across the United States. Because America relies heavily on transportation, fuel distribution remains a steady business. Even though electric vehicles are growing, the percentage of gasoline-powered vehicles on the road is still massive, which keeps Sunoco's revenue flowing. Sunoco is also known for its high dividend yield. In fact, many investors seek out SUN specifically because of its income potential. However, it's important to understand that a high dividend yield sometimes signals higher risk. Sunoco's revenue can fluctuate based on fuel demand, supply chain conditions, and market spreads. Its business is also affected more directly by changes in consumer behavior and transportation activity. But despite these risks, Sunoco has a long history of distributing stable and generous dividends. Many investors see SUN as an income-centric stock, where the primary appeal is the yield rather than rapid growth. Now, if you're running a YouTube channel or planning to create viral content in the finance niche, stocks like OKE and SUN are excellent topics. Energy stocks consistently trend because people want to know which companies are safe during economic uncertainty, which stocks pay high dividends, and which investments can generate passive income. Videos that break down monthly income from stocks, or best dividend stocks for 2025, tend to attract high watch time and strong engagement. And because these two companies are well established and commonly searched, your video stands a good chance of pulling in views, especially if your explanations are clear, your presentation style is engaging, and you show viewers the real-world relevance of these companies. When comparing ONEOK and Sunoco, the first difference lies in how they earn money. ONEOK earns money through pipelines, processing, transportation, and long-term contracts. This creates consistent earnings no matter what is happening with oil prices. Sunoco earns money through fuel distribution, which is influenced by consumer demand and economic cycles. So in terms of business stability, ONEOK generally appears more insulated from market swings, while Sunoco deals with slightly more variable market conditions. The second major difference concerns dividend stability. ONEOK's dividend yield is usually moderate compared to Sunoco's, but the sustainability of ONEOK's dividend is often considered stronger due to its predictable cash flow. Sunoco usually offers a higher yield, but investors should understand that the higher the yield, the higher the potential risk. That doesn't mean Sunoco is unsafe, but it does mean investors should look closely at the financial structure behind that high payout. The third factor is growth potential. ONEOK invests heavily in expanding its pipeline infrastructure and signing new contracts. As natural gas demand continues to rise, especially internationally, ONEOK has room to grow in both earnings and footprint. Sunoco grows through acquisitions and new distribution agreements. While this keeps the company stable, its growth potential is usually viewed as slower and more income-focused rather than expansion-focused. Sunoco is the kind of company an investor might choose if they want income today, whereas ONEOK is more balanced between income and future growth. When talking about risk, both companies operate in a sector that is essential to daily life. Energy demand doesn't disappear. People need heat, electricity, and transportation. Midstream companies like ONEOK carry less direct exposure to commodity price swings, while companies like Sunoco face more volume-based risk. But historically, both companies have shown that they know how to navigate economic cycles, regulatory changes, and shifts in energy consumption. From an investor's perspective, suitability depends on personal goals. If you want steady income and moderate long-term growth, ONEOK might be the better match. If you want high income right now and you're comfortable with a little more market movement, Sunoco might be more appealing. Neither company is a short-term play. Both are long-term, income-oriented investments that reward patience and consistency. For your viewers, it's important to explain that energy is one of the most essential industries in the world. Every day, millions of people rely on fuel, natural gas, heating, and transportation. Companies like ONEOK and Sunoco are quietly working behind the scenes, handling things most people never think about. ONEOK moves enormous volumes of natural gas liquids through thousands of miles of pipelines, and Sunoco supplies fuel to countless gas stations and distributors. When viewers understand that these companies are tied to real-world infrastructure, not just digital stock tickers, they connect emotionally and intellectually with the investment. Story. This emotional connection is important for a video that you want to perform well. Audiences like hearing simple explanations of how a company makes money, why it's stable, and whether it can help them build wealth over time. They don't want vague jargon. They want a clear breakdown of how these businesses support the energy needs of millions of Americans every single day. The message your video can deliver is that not all high-yield stocks are risky, and not all low-yield stocks are slow. It's about understanding what the company does, how it earns money, how consistent its operations are, and whether the dividends come from real cash flow. Both ONEOK and Sunoco have strong operational histories, powerful positions in their respective markets, and long-standing reputations for paying investors. They're different, but they're both valid options depending on the kind of portfolio someone wants to build. In closing, remind your viewers that smart investing always starts with research, patience, and choosing companies with reliable business models. ONEOK and Sunoco both offer pathways to passive income, long-term financial stability, and exposure to an industry that the world depends on every day. Whether someone chooses the balanced growth plus income model of ONEOK or the high-yield income model of Sunoco, both represent powerful opportunities for investors looking to build a stronger financial future.